One of the only few taxes here in the United Arab Emirates introduced in 2018 is known as value-added tax, also called VAT, at a standard rate of 5%. Like in most countries, this is essentially a sales tax collected from the government when goods or services are traded within the country. But what exactly is VAT? When is it implemented? And is it applicable to you? My name is Cheyenne from GenZone, and we help individuals from all around the world set up their companies here in Dubai and the United Arab Emirates, obtain residency, open personal and business bank accounts to pay less taxes, and establish here in Dubai and the United Arab Emirates. So as previously mentioned, the federal tax authorities here in the United Arab Emirates introduced in 2018 VAT, also known as value-added taxes, at a standard rate of 5%. And VAT is defined as an indirect tax levied on the consumption of goods and services within the United Arab Emirates. The value-added tax is applied at every stage of the sales process, and the registered businesses receive a refund or a tax credit on the VAT paid at the previous step. Let's go over an example to give you a better understanding. A manufacturer who produces furniture sells a couch to a wholesaler for 1,000 dirham. In this case, the manufacturer collects a 5% VAT, so 50 dirhams, from the wholesaler on behalf of the government. Then the wholesaler pays a total amount of 1,050 dirhams. Now let's imagine the wholesaler increases the selling price to 2,000 dirhams and then sells it to a retailer. From that 2,000 dirhams, the wholesaler would collect 5%, so in this case, 100 dirhams, from the retailer on behalf of the government. So the retailer pays a total amount of 2,100 dirhams. The retailer then increases the price to 3,000 dirhams and sells it to the customer. And of course, the retailer collects a 5% VAT from the customer, so in this case, 150 dirhams on behalf of the government. So the customer pays a final price of 3,150 dirhams. Now, although the UAE's 5% VAT applies to most goods and services within the country, there are some exceptions, including the export of services. If you're providing your services to clients or customers outside of the UAE, there is no need to charge a 5% VAT. In this case, there would be no sales tax added to your sales price. So if you're providing marketing services from the UAE to a client or customer in Canada, there is no need to add a 5% value-added tax. Now here's what you should know about registering for VAT. Registration may be voluntary or involuntary depending on your company's revenue. It is mandatory to register for VAT if the value of your sales within the UAE exceeds a threshold of 375,000 dirhams for the previous 12 months or the upcoming 30 days. Now, it is voluntary to register for VAT if your company's sales within the UAE exceeds a threshold of 187,500 dirhams for the previous 12 months or the upcoming 30 days. If you learned anything from this video, make sure you subscribe to our channel, and if you're looking to set up and establish your company and obtain residency here in Dubai and the United Arab Emirates, be sure to book a call with the link in our description, and our team at GenZone will be happy to help you.